and kick things off for the event. And, I had a little 30-minute break in there where I needed to take care of business and be on the phone with the property manager. So it's been a great morning so far, and I'm excited to be here.
Awesome. Well, as you're talking there, I'm getting our live Facebook feed going and recording it to the cloud. I missed one recording yesterday to the cloud, so I'm making sure I get the setup. I don't want to miss anybody. But glad your morning went well. We enjoy that breakfast meeting. Dan and I have been down to the Charleston meetup, and great group of people there. So I know you had fun this morning. And is Caitlin running around the house there this morning, or she doesn't want to make an appearance?
Caitlin's going to pop in and say hello to everybody here. Come on. Just come say hi.
That's right.
Hey, everybody.
Good morning, Caitlin. How are you doing today?
I'm doing well. How are you, Brandon?
Doing great. Staying busy as always. I know you are.
Oh, I know. We'll catch up soon. It's good to see you.
Good to see you,
fun.
too. So Caitlin helps out on, Dan and I are partners, and Caitlin helps out a lot. Danny does not trust his own design sense, and he relies solely on Caitlin's fashion and sense of color coordination and aesthetics. Is that correct?
Yeah, and I think it really plays into, the conversation of how do you manage a property after closing, and it's knowing what you're good at and what you're not good at. My brain is wired to be analytical, so I'm good at looking at the numbers and evaluating expenses and where, costs may be, maybe where we can save money or work with a new vendor. And Caitlin's brain works in a different way, where it's all about the feel and the look and the aesthetic, and how is this type of paint color going to draw in a new tenant, or if we lay the tiles vertically or horizontally, what is that going to do to the room to make it feel bigger and look more inviting? And so I think it's a great balance, and, she's helped tremendously along the way in our journey to be where we're at today. And, like I said, you can't do it without a team, and it's just important to know what you're good at. For me, not good at design, good at numbers, good at analytics, not good at the design.
And that's a good place to start. And just a note to everybody, for some reason I'm getting an error message on the Facebook live feed. It's not going live. It keeps kicking it back out. So I'll keep working on that, but we are recording, so we'll have the video, but the Facebook live is not. Actually, Dan's coming in here. He's going to see what he can do. Yeah, it won't live stream. Okay. So,
morning.
Good morning, Dan. How are you?
Doing great. Thanks for
excellent job. I enjoyed your conversation this morning.
Good. Got a lot of stuff to work on, man.
Absolutely.
We all know how much Dan likes to talk, so no, I'm just kidding. All right, so let's go back to our conversation. Since we cannot live stream, we're just going to move on here. So what is the importance? So you've closed on a property. We're to that point now. That's the name of this session. Closing is the easy part. Now, how do you manage once you've closed? And I think, Danny, what, in your opinion, what is the importance of having a team, or do you think it's important to have a team?
Well, I don't want people to think that they need to go out before they get a deal and find a bunch of partners and people to work with and everything like that. And, I think having a team is absolutely important, whether you fill that team through the guidance of a mentor, maybe a paid coach, or a very experienced person who's done it, to help you out. And I need to remember to stay focused on, we've closed a deal, and so how do we manage now? So I think you could certainly manage on your own without a team and do everything from A to Z, and I think you would learn a lot. But obviously, if you want to grow and manage, more than one multifamily property, you're going to need to have a team to support you to take on activities, just because there's so many. And so maybe what we can start with is, what are some of those activities? We've closed the deal, and now what do we have to actually do? And so one of the activities that I do and that, everyone needs to do is you need to be looking at your numbers. And, to look at your numbers, I'm going to step back for a moment. Once you close, you have a decision to make. It's option A or option B. Either you're going to self-manage the property and be the day-to-day property manager, or option 2 is you're going to have a third-party management professional be the day-to-day manager, the people that tenants call and have questions and coordinate repairs and things like that. And so everything that I've done from a large-scale multifamily investment we've always utilized third-party managers. And I've owned and operated some smaller multifamily or some commercial units where, I personally have been that point of contact for the tenant to call when they have an issue. And so you can definitely do it, but if you want to scale, I think you need to understand what you're good at and what you're not good at. And if you're going to go the route of being your own management company, you now you have 2 jobs, right? Not only are you an apartment syndicator investor, but you also have a property management company. And I think it gets really difficult. The model that, we believe in and follow is that you have a third-party management company who's a professional. They're in the business day to day. Bring them on and help them alleviate that. So maybe for this discussion, Brandon, we could agree to say we've closed on a property, we've hired a third-party management company to run the day-to-day. What do we do next?
Right. And so just to touch base back on that, you do have different asset classes that people invest in. There's multiple people here. So we're going to focus more on the larger multifamily spaces where we are using a third-party manager, and how do we manage the manager, in other words. So Danny, you mentioned you love numbers. I know that about you. You also love spreadsheets. I also know that about you. And so how do you utilize data when managing the manager? That's really what we call it. We are, like you said before, we want to utilize someone that's a professional in their space, and then we just want to make sure that they're executing the plan. So what kind of data are you looking at when you're trying to manage the manager?
And I'm going to pull my notebook out here, and I keep this notebook with me. And, every day I just do a new page as I run out of space. And right here at the top with these lines crossed out, these were my first notes about when and what we wanted to manage and make sure in the reports that we're getting on a weekly or daily basis we have. And so a couple of things right off the bat, I wanted to see an actual income and expense comparison to budget on a monthly basis. And then on a weekly basis, I wanted to see some expiring leases, number of tenants that want upgraded units, number of prospective tenant visits and tours, web inquiries, phone calls, any evictions, kind of what's our occupancy numbers. And so what I did starting out is I spent time thinking through and looking at a bunch of standard property management reports, and I put together a 1-page Word doc that listed, as the owner of the property, I expect these 7 or 8 things on a weekly basis, and these 2 or 3 things on a monthly basis. And I went so far as to say I want the weekly reports by noon on Friday of every week, and by the 5th day of the month. And if the 5th day falls on a weekend, you are to send it by Monday at noon. So I I then sent that to the property manager and I said, let's have a conversation about this. And I want to be upfront with our expectations as owners and investors and get your feedback and your expectation as the property management company to be able to deliver on the stats that we need to track. So on a weekly basis, it's really important for us to know the unit count. And so, if you buy a 150 unit apartment community on a weekly basis, I want to know what's going on with all 150 units. And you better believe it, I'm going to sit there and I'm going to count all of them. And so if you say 140 are occupied, 5 people moved out, 2 received eviction notices, and that's your whole update. Well, I'm missing 3 units. I'm going to say what's going on with the other 3 units? Are they vacating? Are they damaged? Do we need to repair them? And so that's an expectation that I have on a weekly basis is I want to know what's going on. And just like any business owner with our inventory happens to be apartments. And so I want to know where we're at and what's going on with every single unit at a given point in time. The other important thing that we did starting out, whenever you buy and you close on that property, is you have a kickoff call. And typically, the way we do it is we'll set up the kickoff call initially. And so we're the ones being proactive with the property manager to, again, set expectations and say, while we're transitioning and taking over ownership and you guys are new in managing this asset, I expect us to have a weekly call at a minimum to talk about property stats and things that are challenging us to make sure that our communication between the property owner, the property management team, and the on-site staff is all cohesive. And so everyone's on the same page and we know that, if we're doing some value add work, that we can notify the tenants properly and saying, landscapers are going to be at the property power washing buildings. You probably don't want your residents moving a bunch of things in and out that day just so they don't get their stuff wet. So I've been talking for a little bit, Brandon. Why don't you jump in and give us a little bit of your thoughts here on, what we've said and kind of, setting up an expectation with your property manager as soon as you close. Have a 1-pager on what reports you expect on a weekly and monthly basis, and then be accountable and have those meetings. You better believe it. We start on time, 9 a.m., whenever our call is, and we're getting through the checklist. And, I even went a second step and said, okay, every item that we talk about, I created a spreadsheet. And then on that first call, I said, who from the property management team is going to update this with the due date, with the owner who owes the follow-up. And my name could be on that list of having to do something, but every item, everything that we discuss gets added to our tracker, and there's a due date and there's an owner on it of who needs to deliver on it. And every week we make sure that we're making progress in closing it.
Okay. Yeah, that's excellent. So far, I do have a couple questions on what you just said, so I want to follow up. One person, Josh, is asking if you have your 1-page summary of expectations available anywhere for people to view.
I will work with Dan to get that 1-page summary shared out. So we'll see what Dan thinks is the best way to share it.
Okay. Let's see here. I answered that live. And then the next one will tie into kind of CapEx, which is going to be one of my next questions. But before I get into that, or one of my next segments, before we get into that, let's touch base a little bit on setting the expectation. So when you first close on your property, you've got this management company. And sometimes you've had a relationship in the past, sometimes you haven't. Maybe it's a new market, and you've interviewed, you've gotten pro formas from different people. You asked them about what they thought they could get costs to. But there's definitely, I would say, almost like a dating period where you're getting to know how each other functions. And we just had that discussion in one of our calls. Like they because some owners or operators are very proactive and they want to just kind of micromanage everything, and some don't. Some want the manager to really run everything, and they don't even want to hear about it. And it's finding everybody's role in that relationship and having it fall into place. And I think that's a very important part of beginning management, is learning how your manager and your operator interact with each other, and learning the lanes, if you will, your roles. But really setting expectations is the best way to expedite that, because if it's very vague and very nebulous, people make assumptions, and they may assume something incorrectly, and that they wanted, maybe they thought we wanted them to handle something, but we wanted to handle it. So you're talking about setting expectations, setting that kickoff call, naming specifically what you want them to report on. That's very, very important, because they start to learn what you expect from them, and we know what to expect from them and how to move forward. And so that's the best way to grow. The other question that came in had to do with CapEx or construction. Like, if, let's say it's a value add property. And so there's a big difference between, managing a stable cash flowing, you're just buying the asset and it's cash flowing. Okay, that's pretty easy. Just keep it occupied. These are the rental rates that we want to maintain, get everybody stabilized here, and that's it. And just, making sure everybody pays rent, and all the notices are sent out in a timely fashion. But when you're a value add property, which is what we do, it's a whole different animal. And you have a whole nother level of details that have to be managed. And really, how do you manage CapEx, or does your manager manage CapEx? When I say CapEx, maybe I should say renovations instead of CapEx. CapEx is really what I'm spending on my renovations, but who's managing the renovations is what we really want to get at. And that's really going to be dependent on who you are as an owner, because not everybody has the ability to be on site and be managing and interviewing contractors and negotiating with contractors. And we'll get into a lot of that later on this afternoon, as Danny and I have a session going into CapEx budgets and how to minimize or mitigate risks of underestimating CapEx budgets. But it's very important to understand your ability. Do you understand construction process? Does your manager work in that market often? Do they have contractors they use a lot of times, and they already have a relationship with them? And do you trust your manager to say, well, this is really a great price on flooring installs, and I don't think we're going to get anything better than that. You could spend a week not believing them and calling around, not knowing who you're speaking with because you're not familiar with the market, and maybe picking a guy that's cheaper but doesn't do as nice a job and doesn't have a relationship with the management company. And but you want to just save a few pennies, so you make that decision, and it ends up being a rough road for your management company. So anything you'd like to add on that front, as far as how do you determine when you're doing a value add property, how do you determine what your manager is going to manage?
Yeah, I would think about it in terms of, what's your best use of time and what does your skill set allow? And so if your property manager has the experience in executing on renovation deals, and they've got a detailed understanding of what it takes, and maybe they've got great relationships with contractors that can go out and get the work done, I would utilize that as an option. I would interview some of those contractors, or I would ask the property management company, give me the name of an owner that you did this for, so I can call them and get a referral. I would then also, because the property manager isn't going to do that work for free, right? They're there to manage your property, and they get paid a certain percentage of your gross collected rents on a monthly basis. Well, they're going to want some sort of premium. And so I would have that be part of that option. If the property manager does it, let's check some referrals and let's get their bid amount. The next option would be, maybe you or someone on your ownership or general partnership team has that experience, the expertise, and the time to do it. And, that's another option to explore. You, of course, have to weigh the pros and cons just like you do with the property management company. And then the third option is, if the property manager can't do it, your team can't do it, do you sub the job out or hire a general contractor, or, Google apartment renovation contractor in your area, and again, get a price, get a quote from them to do it, and talk to some of their referrals who they've done it before, and maybe compare all three of those options. That's really how you should look at every single deal that is a value add, and kind of compare those three, because, even if your team can do it from a general partnership perspective, it may not be the best use of your guys' time if you've got another deal coming up, or, you've got too many deals that you're currently doing. One person can't be in the same place. So that's kind of what I would suggest in determining, okay, you've closed, what do you do with the value add potential? I would have three options. I would evaluate price, cost, and time, pros and cons of all three, and then make a decision.
And I think another factor on that is, what is the scale of the renovations that you're going to go into? I mean, if you're just changing out flooring, painting the cabinets, switching out fixtures, and you already have a budget on that and you know that, and your management company comes in with a contractor they use and that meets your budget, let them handle it. If you're doing some larger things that, could really get out of control if you don't keep a handle on, with different governing agencies that may be interacting with a project or permitting or different things like that, you really want to be careful and be very much more hands-on, because you don't want to get your budget way upside down. But so it really depends on what you're trying to do with the property. I mean, if you're completely turning the thing around, you're going to want to be a lot more hands-on. If it's just, like I said, cabinets and flooring and stuff, and you already have your budget and your numbers work at that budget, and the contractors your management company has meet that budget, let's not, highest and best use of your time, let's not spend a lot of time, pinching a few pennies on that.
Yeah. And the other thing too with that, what Dan talked about this morning, communication, and how important it is, not only from an investor relations, raising money perspective, but it is so critical in this point. Brandon, you alluded to the scope of work. Is it just your upgrade is only going to be paint and flooring and some new appliances? Well, if that's the scope of work, you can clearly communicate that to the property manager. If they're an experienced property manager, which I know you all are working with, they should be able to say, we've got guys that can do that. And guess what? It's not going to be another charge to you, because all the property manager is going to do when that unit becomes available, they're going to say, painter, go out and paint, flooring guy, install flooring, appliance guy, go out, install new appliances, let us know when it's done, and we'll get it rented.
And that becomes a lot easier from many perspectives if they're handling all that, because if they're having to send us a schedule of what units are coming empty, and then I'm having to coordinate with people coming in and then report back to them when they're going to be done so that they can then market those units as being available, there's 2 or 3 more steps of communication in there that wouldn't be in there if they were managing the whole thing. Does that mean that that's not ever necessary to do? No, but I think ideally, and what most people would appreciate the most, is just letting your manager manage that. And they, like Danny said before, they're not going to do this for free. There's oftentimes a greater percentage for if you have a stabilization period, like maybe an additional percentage or half a percentage until it's stabilized for a certain amount of months, or different scenarios. It just depends on the size of the property, and it depends on how long you've worked with the management company. But on communication, you had already talked about, we have meetings regularly with our property manager. So specifically, how often do you think you should communicate with the property management scheduled? Like on a scheduled basis, how often?
Starting out, I would say as soon as you close, I would have a kickoff call and establish expectations, communication, and what reports you want to see. From that standpoint, I would have a formal call once a week for the first year. And if the property is stabilized within the first 3 months and there's no major issues that are going on, maybe you start canceling every other week. I would just schedule it, have that expectation. We're going to have 52 calls every week, 52 in a year, one per week. And you just get it done. And that way everyone knows that this is what we do. Here's how we're going to run it. And it may incentivize your property manager a little bit to get it stabilized faster. So, hey, maybe they don't have to talk to you all the time. So that's another option, but I would just set the expectation as soon as you close, we're going to have a weekly call until we feel that it's stable and there's nothing that we need to talk about. From a second level of communication, I would expect between the owner, the property management company, that you're going to have more frequent communication than once on a call once a week with them. And I would just talk about that in your kickoff of, again, depending on the scope of work and what you have going on, maybe you're emailing a few times a day. Maybe you're emailing just a few times a week with some questions as you get set up. And I would expect, the trend line to decrease is once you work together and build that rapport and working relationship and understanding of roles and responsibilities, that you won't have as frequent communications. But ultimately, as an owner, as an investor, it is my job, it's Brandon's job, it's our job to ensure that that property is running as efficiently as possible, and we're executing on the business plan that was put together for this investment opportunity. And so if something is not going right, it's not the fault of the property manager, it's the fault of us. And, we'll do everything in our power to make sure that it's not going wrong. And so we accept that responsibility. And if I need to, we'll have a call every single day, Saturday and Sunday included, at 6 a.m. in the morning to right the ship and get things organized and stabilized.
Right. And that's kind of what I was referring to. We have scheduled calls once a week, but I'm talking to our management company or a member of it on a daily basis, just because I am handling a lot of the CapEx. So, that's our kind of our group call where we kind of come together. Okay, what happened this week? Where are we on these checklists? But during the week, it's this. I just responded to an email while you're talking, Danny, about an issue at one of our properties. So, it's constant communication, what's going on. Really, I think the key is building that relationship of trust with your management company, and gradually, as that trust builds, you release more responsibility to them. Okay, what you don't want to do is just assume that the property management company that maybe you haven't worked with before, well, they sound great and they sound like they know what they're doing, and I'm just going to let them do it and just really leave it up to them. Things can go wrong quickly. You have investors that you have an obligation to, so you need to be vetting these people in a process, checking them, and like you said, slowly stepping away as they prove themselves reliable in different areas of management in the company, whether that be CapEx or getting units turned and how fast they can do it. Are they following the schedule? Are they meeting expectations in every area that really you're setting with them? And there's, it's a organic thing, right? It's not ever set in stone. Like, we had a schedule when we purchased our last property of, we're going to turn this many units, in the first month and this month, and every time they come available. Well, we did run into some issues in ordering things and delays on getting pricing and different things like that. And, so we had to make decisions based on vacancy rates and different things like that, on what we were going to do and how we're going to proceed. And do we want to just forge ahead with that plan because that's what we said, or are we going to make intelligent decisions and adapt and adjust? So we we talk to the management company. We ask them about rental rates and market rates, and what do you think, and get their feedback on that. I mean, they've been in the market, so if for you not to utilize them to help you make those decisions, I think is unwise. So we talked. Oh, go ahead.
I was just going to say the last thing, and it's important. From a property management perspective, like you said, Brandon, you close on a deal and you hire a third-party management company. There's some operators who let them take it over and just say, send me a check in the mail every month and just take care of things. Well, that's probably not the best approach if you want things to run to meet your expectations or your business plan. And so, ultimately it's your job as the owner, as the investor, to ensure that success is achieved. And, there's no excuses out there. You shouldn't be saying, oh, we've got a bad property manager. Don't play that kind of victim card. If they're not working out, get rid of them and resolve it, and you'll have an easier future because of the tough decision that you made today. And likewise, have those tough conversations, have your kickoff call, have your regular weekly meeting, and get organized, establish that communication, establish expectations, and you're just going to have such a much better working relationship going forward.
Yeah, definitely. And, being active and being attentive to what's going on, because don't ever make the assumption that your property manager knows everything about everything. I mean, we all have different varying backgrounds and perspectives. So one may be in technology, one may be in construction or analytics or numbers. And while they're great managers and that's what they do and they know the market, we may have a viewpoint of expertise that varies from theirs, and we may be able to help them think outside the box, and they may have never realized something. We recently had a property that we have, and we're looking at infrastructure and, just simple things like email software and things like that and cost of that. And we're like, wait a minute, I think we can come up with a better idea. And we were able to save a substantial amount of money in email infrastructure just because we understood that a little bit better than the management company does, because they hadn't dealt with it on quite that scale. And we were able to kill two birds with one stone, get some new hardware and get some new software for less than what they had originally quoted. And that was just a matter of, let's not just just check the box. Oh, that's what it's going to cost. Okay. Okay. Let's look at that. They said it's going to cost this. Now, do I think I can do better? Or do I know something about that could help me save some there? So it's a give and take. It's a back and forth. And, the management companies are very willing. I mean, they can take that now to other properties and they learn something and they can say, oh man, I can do this for much cheaper. I'm spending this much on all these properties and I could do it for a quarter of the price. I'm going to go implement that in all my other ones. And look, I just saved everybody money. It makes me look better.
Some happy clients.
Yeah, exactly. So,
yep.
That was a live illustration of something even that happened this week that we were able to put into play. So it's not just, checking the boxes and walking like a robot through these things. Be analyzing, be looking. Danny is very good at looking at every single penny. He's always looking for ways to save, and that's he's great at that. I'm a more overview type person. Well, especially right now, but he's very good at the numbers. That's why that's his lane. So I have one question here, Danny, that says, do you use a software program for project management?
For project management, if someone could just make a comment, do you mean the ongoing day-to-day property management, or I guess what specific property management software are you referring to have it execute? Do we know?
So I think what we had to clarify here is that we are not self-managing. So if you have several single families and you're self-managing, then you should have a software to manage that, your P&Ls and all the rest of it. When you have a management company, they should have software that they're using to provide you with that information. So does our management company have software that they use? Yes. It's proprietary software that they use, and plus there's your standard Yardi, Rent Cafe, different softwares that many management companies use out there. I think that's kind of along the lines. Having our own, we really don't need any software outside of, database or Excel sheet type stuff.
Yeah. Any activities that we are implementing outside of like the property management, tenant communication, tenant portal stuff, that's all on the third party management. Yardi is one of those systems. I'm trying to think. Buildium is another system that does your tenant kind of management stuff. From any projects that we're doing, we'll use either Excel, as Brandon said, or maybe like a Google Sheet or an Airtable workbook to list our activities. And again, you don't need anything that is, too extravagant. You need to have a list of your items, a due date, and an owner. And, maybe you build in a timeline to that. But again, list of what you need to get done, a due date, and an owner. And that's really the most powerful thing you can have from a management system, and you just kind of share that list. So if you use a platform like a Google Sheet or Airtable, you can all see it in real time and make edits and updates. And we utilize Airtable for some of our management activities or project management, but nothing replaces a good spreadsheet.
Well, and that's basically what Airtable is a spreadsheet inside a collaboration platform, so you can add documents and different links and stuff like that. So that's really just how we collaborate. But I would say we do so more on the front end of the acquisition of a property than on the back end on Airtable. Josh had mentioned here that some possible things to track projects, even managing the manager, would be Trello, Microsoft Project, Easy Project, or some examples for collaboration tasks following. So thank you, Josh, for those. One other question, and I'll answer this one and get your thoughts on this, Danny. Are you using existing management generally? So first off, I'd like to say to that question, there is really no generally. It's on a case-by-case basis. Every property is different. Every management company that is currently managing the property is different. And every employee working for the management company for each specific property is different. So there you have at least three factors that are going to play into that decision. So let's take, for instance, the property management company. When you tour the property before you purchase the property, you're going to have interaction with the property management company. Probably their regional and probably their on-site staff you're going to meet with during the tour. Most of the time you're going to meet with the regional, okay, because they want you to have that upper level. That is a good gauge of what the personalities are. Are you going to mesh well? Are you getting responses to your questions well? If they're not responding to you well during a tour, knowing that you might be the potential new owner of this property, it's not really probably going to go well if you are the owner, So I'm interviewing the current staff as I'm touring the property on whether, we're going to utilize that management company once the property's purchased. Then let's say you did decide to keep the management company that was there on site when you bought it, and that's fine. I mean, there could be, you can still work with them and cut costs and different things like that, and you may interact well. But let's say you do that and there's some of the staff maybe on site aren't performing maybe to the best to your what you expect, your best expectations. So you may maintain the management company but not maintain on-site employees, or vice versa. You may switch management companies and you decide with the management company that it'll work to retain on-site staff. So there's different options there, and it's really case by case. There's no cut and dry answer. Anything you'd like to add to that, Danny?
I think that, it's definitely a case-by-case basis. The thing that I would always wonder is just before you close, why is the owner selling, and is the existing property management company doing a good job, or is the owner selling maybe because they're not doing a good job? And what I would say is once you are to a point where you are scaling and you're buying a couple of properties, larger multifamilies, I think you're going to find that you have a good working relationship. And, what we believe is investing in that relationship. So, we're doing a lot of work right now, getting to know our new property management company and how we work together. And so for us, we want to scale, and I don't want to have to go and have the same conversation about expectations 10 different times with 10 different property managers. And so what I would say is, probably going forward, you're going to find one management company that you like and work really well with them. And you're probably going to want to utilize them for all of your future deals when you close on them. And, so generally you probably wouldn't go with the existing management company if you have a good relationship with the existing manager. So, something to think about, but all great points, Brandon. I think you just need to case by case basis, management company by management company, by property type, by business plan, and by, specific employee relationship as well.
So one of the questions that we have here, it's actually one of my property management people calling me right now. I'm not going to decline that, get that later. See, it's nonstop. We work constantly on this, but one of the questions is, what specific things are you looking for on the reports from the management company? Is it like vacant units, what units have notice to vacate, what units are coming available, P&L, what type of things are you looking for in the report?
I'm gonna pull up my asset management reporting requirements Word doc, and we'll just share that real quick.
Okay.
So Brandon, let me know when you can see my screen here.
I can see it.
Okay. So I've got the weekly reports. So we've got a scorecard that we expect to get on a weekly basis. This includes physical occupancy, economic, delinquent residents, number of maintenance requests, leases expiring, number of residents that are pre-leased, move-ins, move-outs. So a bunch of scorecard information. And then we've got some leasing reports. So summary of leasing activities, move-ins, what was the price they paid, traffic information around the property, leasing information, delinquency report, accounts payable. So I want to know all the bills that we need to pay at any given point in time. And I want that on a weekly basis so I can know where money is being spent before we spend it. And then we've got cash on hand. So I want to know how much money is in our operating account that the property manager oversees. And then monthly reports, we've got our income and expense statement, deposits of security deposits on balance. So I just want to see how much is in that account. And it's a pretty quick check. We've got a GL summary of financial transactions, a balance sheet, summary of debits and credits, so kind of your transaction information, and then a rent roll and an expiration of leases, and then maintenance summary on a monthly basis. So that's kind of where we're at and what we've got. I know we've got, just on a time check, I think we've got about 30 more minutes, right, Brandon?
Yes, that's correct.
Okay.
And let's see, I'm checking the questions here. Mike asks, Danny, do you read the book Traction with mentioning scorecard and having the weekly meeting updates? They were just curious.
I've never read Traction. I've heard really good things. It's on my list to get to.
Gotcha. All right, I'm responding to another email about to one of our properties here, just trying to keep on track with everything while we're working here. So many of the questions have been about construction and how to regulate that. So pretty much what we do on that is we set an expectation. So we have a list of vacant or property or units that are coming vacant. And as they come vacant, we will set expectations for them. And we'll say, okay, I want them trashed out, which is, getting all the trash out of them, couches, furniture, anything left like that. In 24 hours of vacancy. I want the cabinets and the flooring, depending on what you're doing, out within 24 hours of that. And then you just schedule things out from there. Flooring install, cabinet install, fixture replacement, painting, different things like that. And so you set those expectations based on those units, and you follow up on your weekly calls to see how you're going on those units that are available. Did they meet the expectations? If not, what do we need to do to change that? Did I set too high of expectations? I've been known to do that. My background is in construction, so I've done all of this work before. I can literally say I've done every aspect of construction. And so I understand what it takes. Sometimes I tend to set expectations a little high, but I think that's a good thing. But you do have to be realistic and reasonable, and you have to know who you're working with. And so let's say you got some really young guys on your maintenance staff, and they might be able to rip and roar, and tear stuff out a lot faster. Maybe you have some more experienced maintenance staff, and while they may not be as fast, they have a lot more expertise and have been doing it a long time. So there's a balance there. So you got to know who you're working with when you set those expectations, and you have to be willing to adjust. But you don't want to be a pushover either. If you set expectations and they're reasonable, then those expectations need to be met. And if you start not meeting expectations on these weekly calls when units are coming open, then it's not going to go well for you. You're not going to hit your schedule. Let me just check here. We don't have any questions currently in the question and answer box. Make sure you post your questions in the Q&A box. That's down at the bottom, Q&A. Because if they go into the chat box, it's hard to track them. They could, scroll up. I'm watching the chat box, but sometimes, I might miss them. Here's a question from Matt. What value do you see from green rehab? And that is a tough question, because that's something that we have been looking into recently. Some of the direct federal tax credits were revoked in 2017, and that we're looking to see if they're going to be extended in 2019. There's no word on that yet. That is different. There are other tax credits out there, and I don't know the names of those forms, so I'm not even going to pretend to say I'm 107 whatever, because I don't know. But we've had a discussion with our accounting and with our cost segregation firm or tax engineering firm about that. It's very important to check into that, because if there is something out there, you want to make sure you're utilizing it. So you need to do your research and see what's out there. And it also depends on what kind of debt you have. If you have an agency debt, Fannie or Freddie, then yeah, green rehab is a huge deal, because it's going to affect percentage, or when you go to exit the property, whoever is going to buy it, what their rate's going to be. Danny, did you have something to add to that?
I did. And, what I want to add is, when you close, you need to figure out who your other valuable team members will be. And not that they're on your payroll team member, but, one of ours is we built a relationship with a CPA and engineering firm where they really specialize in apartment cost segregation studies, as well as accounting needs and tax preparation for syndication groups. And so having that person on our team where we, Brandon called them and said, hey, come out, take a look at our property, let us know what you can do from a tax saving standpoint, from a tax preparation standpoint, from a green study standpoint. Let us know what we do with our old with our old appliances or old, I'm trying to look for the right word, not assets, but old physical items, do we try to sell our appliances to a used distributor, or do we write them off and take a loss of the value of that old appliance? And so bringing in those experts, and if you're curious about, should you do a green study or not, I would go and talk to 3 people who do green studies. I would have them give you a quote for what their work does and have them give you a summary of what benefits you should expect, and then you make a decision from there. And that's really the approach that we take is, we're not trying to be tax experts or cost segregation experts or green study experts, but we will go and find and have a conversation with those experts to be a service provider for us and bring us the best approach that we need to take.
Exactly. And so there's other things to look at too, besides just green study or green rehab. Talk to your local power company. Maybe they have a rebate program on LED fixtures. There's all, and we're looking into
doors and windows as well.
Yeah. I mean, if you're going to do a renovation regardless, and you're able to get a credit or some kind of rebate from a power company or from a state agency or a federal agency, well, you can cut your CapEx budget in half by doing that. I mean, it really just makes sense just to do that. So there's great value in, we're just going to call it green rehab. That's energy efficiency, but just, you're going to have to check it with your professional on your team, your tax professional. Maybe your property manager has experience with that. Let's move on to another question. Let's see. This says, do you have the latitude to impose penalties for non-performance of the property management company? That's not in our contract. Oh, go ahead.
That is contract specific. I would, again, bring an attorney on to your team to review the contract you signed between the ownership entity and the property management company. So again, we're not experts on the law, and enforcing contracts is, I'm sure, inexpensive and costly, certainly a timely matter. So I would talk to your local attorney and have them be your expert on what you can and can't do and the cost and time to enforce non-performance issues.
I think you're going to find it difficult to get a property management company to agree to penalizing themselves for not meeting your expectations. So that's really the key here. You're the one you're the owner. You're setting the expectations. I would find it hard to believe that many management companies would put themselves in that position. Could you? It would be contract specific, as Danny said. So here's another question. As an asset manager, Danny, what is your top priority, or what are your top priorities and duties on a weekly, monthly, quarterly, and yearly basis? Maybe just as a recap of kind of what we've gone over.
My top priority for the area that I'm in is the finance area. So my absolute top priority is on a weekly and monthly basis to ensure that our income, expense, and NOI, net operating income targets are being hit. I also need to monitor, what rental rates are we achieving, and are we hitting our goals there, as well as are we trying to drive expenses down and increase efficiencies. So my number one priority is to ensure that income, expenses, and net operating income align with our budget and our expectation. And that's what I do, and that's what drives all of my other decisions. So once I'm focused on that, I can kind of trickle down into the items that feed that one thing that I do, that one goal: income, expense, net operating income, to ensure our targets are met. Well, a component of ensuring income is met is, what's our occupancy? Where are we letting tenants move out to upgrade those units and moving someone new in at a higher premium. And so it's a balancing act. You need to watch those other fine details and, make sure that you're checking in on each of those. But, my one purpose, income, expense, net operating income, and making sure that it is achieving our budgeted goals that we expect that property to do.
All right, so we have
Special guest on room 2.
that's right, Dan in here, and Danny's getting a phone call. Danny, here's another question. What is your approach to getting buy-in from your property manager on the overall property strategy ahead or after close? Thinking rents, expenses, renovation schedule, etc. And I think that would go along the lines of like getting pro formas during the bidding process before you purchase the property.
Yeah. So before we close, I would have already had a conversation with that property manager about what do they think about the property. Likely they're going to have experience. They're going to know the market a little bit. I'm going to say, hey, what do you think these can rent for? Meanwhile, in my back pocket, I've already got an analysis that we've done of comps and the dollar amount I expect. So what the number they say should match what I already have. And so I'm just kind of building that rapport. They're going to talk to me about prices, what kind of fee they're going to charge us to manage it. We're going to talk about, employee structure, vision for the property. Do they agree that we could take a C-class asset and turn it into a B in that specific market? The answer is hopefully yes. But if they disagree, then I would take their feedback and see what, if we're looking at it wrong or what we need to do. And so once we close, the vision for the property and the high level understanding is already done. And now it's really just about setting expectations and working together to achieve that goal, coming up with our checklist, the item, the due date, and the owner, who's doing what, to make sure that we can meet our goals. And we really break it down on what do we need to do this week? What do we need to get done in the month? And how does that track us to the year? Because ultimately, if you miss a week, you're behind and you're going to fail at your year-end target unless you make it up. And so that's kind of why we look at things on a week and then a month and make sure that, we're hitting those goals regularly. And with that, I'm going to turn it over to you guys, and I'm going to catch you guys later in the afternoon.
All right, Danny, thank you.
Thanks, Danny. Appreciate you filling in.
So Danny had a previously scheduled appointment this morning. Let me. There we go. So he had a previously scheduled appointment this morning. So like I said before, as we were talking on that, I've had a phone call from one property manager. I've emailed 2 others. Danny was on a phone call at another property with another property manager in another state before he got on. So you're constantly active as an operator, making sure that you're managing the manager. It's very important to have teams that you trust in place, and growing trust is very important as you build that relationship. It's slowly letting them do more and more, still supervising, but still delegating more and more. That's the point, right? Because if you're going to scale, you have to be able to step away from that more and more. So if you want to scale, if you want to grow, find a management company you can trust, that you can grow with, that can scale with you. But as you get into other markets, you're gonna be using different management companies. So it's definitely a personal relationship. So make sure personalities mesh with the regionals and the on-site management staff members if you want to be successful. I had another question about Energy Star score on the properties. We have not Energy Star scored any of ours yet. We're doing a lot of research on that front. We've looked even into solar credits, different things like that. So you have to understand that the market is changing. we want to be aware of our energy efficiency, of our carbon footprint. Our clients, our tenants are concerned about that more and more. So if we can provide them with a very valuable, cost-efficient unit, that's going to help from our client base. I'll let you say. Dan, do you have anything you'd like to add? We're getting close to our wrap-up time. We have thankfully, I don't sit in your room and critique how you talk.
I know. Well, I'm here, so I might as well critique it a little bit. Let's see. So I'm gonna so somebody put on the chat box about the book Traction, and it is a very good book on trying to create some systems and meeting goals and putting some systems and processes in place and using scorecards and various things like that. So I would definitely suggest and recommend that book. It's called Traction. And so I would definitely, recommend that you get a copy of that book. It'll help you creating some systems and procedures. Looks like Danny's raising his hand. Let's see. Danny, did you need something? I don't think so.
I'm here.
Oh, okay. All right. I'm going to mute him again there. Just had your hand was raised there, so just curious. All right. So that's all right. And on here, I'm not sure exactly what all you guys talked about, so I don't want to start to go off on a tangent about something if you've already talked about it. We're at the end here, so if you have any further questions, take it over to the forum, MFIN forum. You have some time right now. The next session doesn't start till 11 o'clock, and that next session, do you have that one up for the next session? And then room 2 there's going to be another session, and it's going to be called Converting Your Long-Term Rental into Short-Term with Andressa Gadelli. So she will be here at 11 o'clock to present to you on that topic here in room 2. And then in room 1, I'll be covering the multifamily syndications, investing and managing A to Z with Vinny Smiles Chopra. So looking forward to his session in room 1. Between now and then, since you have some extra time, go ahead and go to the forum, start a conversation there, or go to nextmfin.com. So you'll see on your screen right now that there is there'll be the website to be able to register for the ticket. So you can just go to nextmfin.com until the next session sets up. Shouldn't take you very long to do that. You can get your tickets for $97 right now. They will not be any cheaper than that, even the add-on tickets in the future. And you can also get the VIP upgrade and access added for $100, so half of the $200, which is what it costs now. So for $197, you get VIP access to the next event. So thank you guys so much for paying attention. And also one more thing, MFIN survey. Go to mfinsurvey.com. Please fill that out. We had a little over 30 people fill it out yesterday. It's really going to be very helpful to us as we move forward. So please do that as well. So thank you again, and we'll see you back here at 11 o'clock.